right, traders, this is Blake Morrow. You were listening to the Morning Edge webinar. I want to welcome you all back, and happy Thursday to you. And so I got just to read a couple of comments. Scott says, oh, I've just unfollowed that little shit. Kelly said, no integrity, no backbone. I hate those kind of people. I know, me too. And that's, he tried to send me this letter like, no, my followers wanted this, and I'm like, yeah, no, no, no. You're not offering free webinars at the same time that mine are, and in a chat room. Yeah, whatever. No. Anyway, okay, guys, let's talk about the markets though. And Jai asked, how was my Disney trip? It was awesome. 14 hours the first day on my feet, and my older son at 10 o'clock was passed out on the ground. Like, we were watching the fireworks show. He was literally face first on the ground. But he got a second wind, and we did the haunted house at midnight. It was great. It was epic. The day one, day two was a little easier. We went to the beach. It was great. Okay, let's talk about let's go to the euro and let's discuss the euro. So there was talk from the ECB about possibly restructuring their quantitative easing. Now I think people misinterpreted that as oh, what Kimmy said, I used to follow him on Twitter, then I saw him deleting trades that hit his stop loss. No integrity at all. Really? Wow, that's interesting. I'm sorry, I was reading a comment from Scott. You know, Ziggy said he would record the Trade King discussion, and he'll post it if I want him to post it. I told him I might say some things that may not need to be recorded, but since some of you might end up missing it, Scott, I'll have him record it. I'll just be nice. I'll be nice. But there are some things that I'll say that on when I talk about the Trade King MB trading discussion that are going to be a little bit of reality that I think you as a trader really need to understand. And so I will be discussing that in an hour from now, and I will have Ziggy recorded. Ziggy's listening to me. He's going to be listening to me. He's listening to me right now, so he will record that conversation about Trade King. Like I said, there's some things that probably I don't want him to record, but I'm going to say them anyway because screw it, you know. These things need to be said, so they're going to get said. They're going to be said. Okay. Anyway. Let's go to the euro dollar. And so going back to the euro, sorry, I didn't mean to get sidetracked there. So the ECB, Nowotny, he'd mentioned about QE being possibly restructured, about how they're going to, offer debt, whether it's auction style or bidding for it or whatever. I think people misinterpreted like the European Central Bank is going to do more quantitative easing. I think they're setting the precedence of that's what's going to happen, but I think the message was misinterpreted today. One of the things that we have to note is we were approaching 115 on the euro dollar. Okay, so the euro dollar is approaching 115, and 115's it's got to be a big barrier. When you think about round numbers, you go $5. $10, those round numbers, they're big numbers, they're hard to breach. And so when you're approaching a 115 level, it's kind of like going to 120 or 125 or 130. They're just going to be tough levels to hit. And I think it might have been a little bit more of an excuse to sell off ahead of those numbers. Today is going to be very important for the euro dollar. And let me get rid of this ascending wedge, because the ascending wedge actually broke higher and it didn't break lower. But the one thing that I have to note here is that 618 retracement, we closed basically on it yesterday. I mean, you could say, oh, we closed above it, Blake. You can argue with me that maybe my numbers aren't right. We basically closed on that level, and if we fail to close above yesterday's highs, that could really suggest that the euro is, struggling at this 618. Okay, I am going to write down at 115 as key resistance, but really note that this 114.70 is a big deal. Okay, so 115, it's key resistance today. I don't even know if we're going to touch it. I mean, a lot of it depends on the U.S. data. I'm not expecting good data today, but I'm not an economist either, and I'm not an analyst as far as, I don't break down economic data, and I'm just saying that we've hit a nice soft patch in U.S. data, both manufacturing and inflation. So I can't imagine that the CPI data is going to be like print outside of expectations to the upside. I think the risks are more to a downside print. However, I also believe that most of the market thinks the same way that I do. I don't think I'm outside of the norm saying that inflation is going to be weak. All right. I think everybody looking at producer prices earlier this week and looking at the trend that we've seen in inflation, one of the hesitations of the Fed has been, well, the Fed's not going to raise rates. Why? Because of the deflationary headwinds. So why would you expect CPI to be, rip-roaring? I think everybody's expecting a weak CPI print and weak manufacturing on top of that. So could we hit 115? Yes, unless you have too many people that are saying, okay, it's going to be weak anyway. So if you get weak data, the dollar starts to strengthen because maybe the dollar's oversold. That's a possibility. I don't want to think about that possibility right now because I don't. I'm like I said, even though I have I think the dollar is oversold, and I especially want to start shorting the commodity currencies. I'm doing it on cross rates. I'm not doing it via the I'm not doing it via the dollar yet. I'd like to see the dollar actually start to show some signs of a reversal. That could be today on the euro, for example, if we get a bearish engulfing pattern, like, we'd have to drop all the way to 113.70 today and stay below there. Is that unheard of? No. Could it happen? Sure. And if it happens, I'll start to look to short the euro starting tomorrow. I don't have to be the hero today picking the top. That's not my game, and that's not what I'm looking to do. All right. But right now, you look at the euro dollar. The euro dollar is approaching some support, and I would say trend line support comes in somewhere around here. Right. You can just connect all these trend lines. It's going to come in around 114. 114 is also, it's a round number. It was also a breakout point through here. So 114 is going to be really key support. All right. If broken, we might be looking at a dollar reversal for the next few days. Now, when I say dollar reversal, does that mean the euro is going to go down to 105? No, not necessarily, but we could get the euro back down to 110, 112. I think those are doable numbers, especially being in a range, but we have to breach through 114 first. And really, if we get below 113.75, then you're talking a bearish engulfing pattern. But that's looking way too far ahead, and I'm not thinking about that right now. What I'm more considering right here is, do we hold 114? If we do, it might give us a nice place to be long. Again, the dollar has been beat up, and it's been beat up for a reason. There's a big shift in sentiment about where the dollar is going moving forward, what the Fed's doing as far as interest rates go. So, I think the dollar is a little handicapped right now. All right, so buying the dollar or buying the euro, at 114 might be the best play. But what I would do is wait for a reaction down here. What happens down here is probably very important for the euro. Okay, let's go take a look at the. And I guess I'll put a bias. We're still in a range. I mean, you can say, oh well, the euro is bullish. Is it? Is this really? In the grand scheme of things, is this really that bullish? I mean, we're really just more or less range bound. We might be slightly trending higher, but still in a very, very, overall bearish trend, but just overall sideways trend right now. All right, let's look at the cable. So, I tweeted out a chart today of the pound hitting highs. Now, you might say, well, Blake, if you think the pound's peaking here, why'd you go long the pound New Zealand? Because I actually think the Kiwi's going to be a good short soon. Okay, which we're going to talk about here in a second. But as you can see, the cable 155 is a big deal. 155, you got 161% extension, which is a golden fib, of this last move down, 161% extension, long wicks here. We might set up a little, inverted hammer, whatever. 155 is going to be a big level of resistance today. And I don't have to write down the high. I can just write down 155, and within 10 pips of that number is going to be pretty big, right? We are in a range. Okay. Keep in mind, guys, the pound in pound the if expectations, okay, if expectations of expectations of the Bank of England raising rates, if the U.S. expectations for the Fed raising rates have diminished, you can believe that the Bank of England, those interest rate expectations are going to diminish as well. Now, I know Carney last week said, well, we're not dependent on what happens in the U.S. I know they say that, and I know you want to proclaim your independence, and but it really is. I mean, if the Fed's not going to be raising rates, it's going to be really tough for the Bank of England to go off and raise rates as well. I truly believe that. Now, it hasn't reflected yet, but that doesn't mean that it won't. I think if you want to short the cable right now, your risk is 155.20, 155.30. Because if we break above this, I mean, we're going higher. We're going, probably back up to the higher 150 is like 158 or so, if we can breach these highs. Now, I would be an advocate of that on weak US data as long as the dollar continues to move lower against the euro and whatnot. Okay, support though from here is really easy. It's 153.80 or whatever this is. Okay, 153.80 is support on the way back down. That was the breakout point. It's going to be, and if you guys want to get long the pound, I think this is the best place to do it. Okay, so 153.80, 153.80. I wouldn't get caught chasing the pound up here. Not right now. Not right now. Not after it hit 161% extension. You hit a golden fib like that, and you wonder why you get stuck in the mud. Well, it's a golden fib. 161% extensions. More times than not, and I would say a high percentage of the time, will stop something, whatever instrument you're dealing with. It will stop it at least temporarily. So, if you're getting long up here and you're like, well, what? I just bought So, yeah, that's the issue right now. Malcolm asks, or no, Fred asks, are you shorting the pound now? No, I'm just not comfortable buying the dollar yet. I'm not, but if you want to short the cable, I'm just saying that to me is a good risk reward. Okay, I'm just not comfortable buying the dollar just yet. As you guys know, my dollar position right now is the Swissy, and that's really more or less shorting Swiss francs, and I'm willing to hang on to that for a long time if I have to, and I will. Actually, I don't mind the carry, and I don't mind holding it. So, anyway, the pound, I'm not 100% convinced that I need to be buying dollars just yet. At least not against the non-commodity currencies. Now let's go to the yen. Oops. Yeah. Okay. Let's go to the yen. So the dollar yen. Paul was really interested to hear my take on the dollar yen. And listen, the dollar yen, we broke below support. Now this is easy. This support right here will be resistance. So let's not knock that out of the way. Okay, so any move back up to 118.70. I'm sorry, 119.70, is that what it is? Whatever that low is here. No, it's 118.66, so 118.70. That's going to be resistance, plain and simple. 118.70. Okay, that's resistance. I've warned you guys for 2 months, okay? And I'll say this again. I've warned you guys for 2 months. Big red bars like this, big move like this, is usually followed up by another big move. I was really hoping we get to 122 first before this happening, but we're really starting to roll over. And what's going to accentuate this move, obviously, is a move lower in equities, because it's moving down right now, and equities are moving higher overnight. That's scary. If you're shorting the yen, that's scary. You know, I'm short the Canadian yen. I'm short the New Zealand yen. I'm down 50 pips in the New Zealand yen. I'm up 134 pips in the Canadian yen. And I've been in those trades since Friday. All right, I'm playing the yen to the long side. I'd really, really like to short the pound yen, you know, below 180. I'd really want to short the euro yen on a breakdown of this triangle, which we talked about it yesterday. Yesterday, somebody asked me about the euro yen. I said it's at the upper end of its triangle. It's probably a really good short up here. I didn't short it. Okay, I did not, but it was you know, you can see we're at the apex right now. This thing, you know, we break through 134, and you know, you gotta watch all these yen pairs, euro yen included. All right, but you know, looking at the dollar yen, I don't know if I would stand in the way. You know, so we go to this low here. Let's figure out where our supports are. So we go to this low, and I'm gonna have to look at this on a couple of different charts. 618's at 1822. All right, so let's go over to go to the dollar yen here just to double check, see what quotes that FXCM has. Let's go to, and let me zoom in a little bit. Yeah, they have the same 118.22. See, we're breaching the 618 of that, and that's scary, because if we go lower than today's lows, which is 118.05, so I'm going to write down 118. Below that's 117.25. Yeah, that's scary, huh? So 118. Now again, I'm going to reiterate. I think the CPI is going to be weak. I think the manufacturing data is going to be weak today. Both Philly, Fed, and Empire State Manufacturing, which will happen first. I think both those data points are going to be weak. All three of those data points are going to be weak. I don't know if the dollar is going to weaken against the non-yen pairs, but I have a feeling that if that data is weak, the dollar yen is going to get crushed, and we're going to see below 118. Okay. Now again, I don't know if the dollar is going to necessarily weaken against the euro or the pound, because I could see the pound yen dropping aggressively. I could see the euro yen dropping aggressively. If we see the euro yen drop aggressively, that means the yen is picking up steam. Also, the dollar is picking up steam against the euro. So we could see dollar strength and yen strength at the same time. So 118 is support. Below that is 117.25. Okay, so we have a couple support levels we need to pay attention to. Now let's go over to the Swissy. Swissy, you know, obviously I'm not happy about them. I'm long the Swissy. We're at a 618 retracement. We're holding it right now. I am a little concerned, because if stocks get weak, the Swiss might strengthen, and I think it's temporary. It's just like over here, when we dropped 1,000 points in the Dow, the Swiss franc strengthened, but then it quickly gave it all back, because no one wants to hold Swiss francs long for too long. It hurts. But Swiss National Bank punishes institutions for holding the Swiss franc long for too long of a period of time. So, you know, I don't worry about holding the dollar Swiss long term at all. Okay, but I am nervous that it could fall even further than where it's at right now. Okay, so we have a 618 that's holding, and that comes in at whatever this low is, 94.75. So I'm going to write that down as 94.75 as support. Okay, support 0.9475. Okay, resistance right now is any move back up to 95.25, and really, I mean, just to cut through the crap here, we really have to break back above this blue line which could be anywhere between 95.40 and 95.70 by the time we get up there. Depends how aggressive we get up there. Obviously, if strong inflation and strong manufacturing data, let's say I'm dead wrong, which I could be. I'm not, just because I expect weak inflation data and weak manufacturing data. I mean, I'm not an economist. I mean, we could get complete opposite of that. So, but let's say data comes in super strong and all of a sudden the dollar Swiss spikes through this resistance. We'd really have to break through this blue line to change this current dynamic of the Swissy. But really, I think 95.25 is going to be tough. 95.25. It's going to be tough resistance. We are in a range. Dollar Canadian. Now, we talked about this earlier with Paul here. I'm gonna do this because I have about I don't know, about a couple hundred more listeners that were listening that are listening now that weren't listening early this morning when I first started. So let me just go ahead and remove everything here, and I'm just going to do this real quick. Okay, and I'm going to re-say my rant. I think that these commodity currencies are ready for a turn. That's why I'm starting to buy the pound New Zealand already. Okay. The dollar Canadian is no exception to the rule. If you take the dollar Canadian, you look at the overall trend, it's very, very strong. People like me and people that think that the Canadian currency is going to eventually weaken further, starting to look at the dollar Canadian attractively as an attractive trade here from a value standpoint, value proposition standpoint. So first and foremost, you'll see this horizontal support through here, and you'll see the 38% retracement that we're holding of the 119 move to the 134 high. Remember when we hit 134 and I said, hey, that looks like a false breakout at 134. Remember that? Tweeted the chart, said it looks like a false breakout. Didn't catch any of us off guard because it came down. It came down, and we felt pretty good here. Okay, now, here we are. We're at a 38% retracement. We got some horizontal support just below. If you take the move from 130 to 134, we're also at 127% extension, or really damn close to, okay? 127% extension. Also, if you go back to this daily chart and you go, wait a second, Blake, wasn't that the breakout point at 128.40 or so? And I'll say, yes. Well, yes, it was. 128.25. All right. So you can see how much support is down here. So I'm making the assumption right now people are already starting to buy the Canadian because you're seeing it as a value proposition. We've got, multiple levels of support that are coming into play. Fib extensions. We've got horizontal supports coming into play. There's a lot of support down here. So as you get down here, you get people like me that say, well, I'm ready to buy a little bit down here, and I'll buy a little bit more if it goes lower, but I'm willing to start nibbling. And that's what I think traders are looking at now. They're starting to say, okay, I see it attractive down here. I wouldn't be a buyer at 134, and I wasn't, but now that we're back down to 129, these are more attractive levels to be long. Because I ultimately think the dollar Canadian is going to 150. That might be a trader's attitude, or somebody who's taking positions in the market. So they're willing to buy it on a dip, sell rallies, buy it when it's cheap, when it's on sale. They sell it when it's full price. That's what we do in the markets. We buy low, sell high. So in this case, I do feel that anywhere down to 128.25 is going to be massive support if we can get down there. And that's an if. I'm really considering buying some down here. I'm really considering buying some dollar Canadian down here post data. I really am. I just, I'm like I've mentioned to you guys, I'm a little gun shy buying the dollar right now. It's been really weak. I think it's this cycle of weakness is coming to an end, but I'd like to see some price action today to confirm that. Now, in the event that we get a rally here, and remember yesterday, how many people were trading the inverted head and shoulder pattern yesterday? Jared just made a good comment. I'll check that out here in just a second. How many people were buying that inverted head and shoulder pattern yesterday? Think about it. It's attractive, right? Oh, dude, it's a head and shoulder pattern set up perfectly. And I'm like, nah, you got to break the neckline first. It looks too picture perfect because 90% of this right here will be a continuation pattern. Well, bam, continuation pattern, right? Think about all the people who got stopped out right there. Those are all the people trying to anticipate the inverted head and shoulder pattern. Okay, now, experience will tell us that we wait for the neckline to be broken on head and shoulder patterns. Jared, J-A-A-Rod, in our chat room, he said, hey, there's a trend line coming into play here too. Boy, Jared, there is. And good eye, because I wasn't even looking at that. So Jared is one of the many talented traders that we have in our chat room, which I appreciate on a daily basis. So Jared, he said, hey, there's a daily trend line that comes into play there. Very, very true. Okay, so now where's resistance? Where are we going to find resistance in the Canadian? Good question. Well, personally, I think any move back up to 130 is going to, it's the big round number. People are going to be like, oh, it's back at 130. I'm going to short it here. You're going to get that attitude. We might be doing this realistically. Something like this. That's possible. I wouldn't worry about it for right now. I think any move back up to 129, what is that, 57? So 129.60, probably going to find some sellers for now. 129.60, 130, okay? And we are in a big, fat, stinky range. All right, when I get back, I got to go get some coffee. I'm out of coffee. So when I get back, we're going to do the Kiwi, the Aussie, the dollar index, peso, Norwegian krona, Swedish krona, Brazilian real, Turkish lira, Vietnam dong. I'm just kidding. Okay, I'll be back in a few moments. Don't go anywhere. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar, and I want to welcome you all back. If you guys are new to the Morning Edge, first of all, I want to say welcome. Been broadcasting for since 2002. This is 13 years of this broadcast, and there's people that are listening in that have been listening in for over 10 years, some 13. And a lot of people just make this a normal, part of their day. Because listen, I get a lot out of it. For me personally, because as a trader, as an independent trader, it really helps me in my trading day, kind of going through everything methodically. We go through the same analysis every day. It's not, if you come here and you expect different analysis tomorrow, you're not going to get it, because we do the same, we go through the same, jump through the same hoops every single day, and we've done it for many years. I mean, everybody knows this is exactly what you see is what you get, which is great. Consistency, it's consistency in the markets. But I know as a trader, for you, it's lonely out there. I traded from home for, I did it for like a year. Back in the late 90s, I came off the trade floor. I said, because I got a T1 line back then, was expensive, but it was like I got like this high-speed internet connection into my house, or my townhouse I was in Dallas, and I'll say Old Town. I was in Old Town. Which is basically downtown Dallas, and I had this high-speed internet connection. I was trading from home, and I realized how boring it was. And it was boring, and I didn't have any interaction. I didn't get to talk with other people, and I know, with trading floors non-existent anymore, it's nice to be able to bounce ideas off of people, and I try to answer every question. I'm not able to get to them every day. Obviously, when you got 1,500 to 2,000 people listening every day, and a lot of questions are being asked. I can't address everything. I try to. Some days are better than others, but but anyway, I hope you decide to make this a part of your everyday, because we cover everything. I mean, I may be covering currencies right now, but we'll look at the indices. We'll look at what's happening in the different precious metals markets and crude, and look at even individual stocks if you really need to see them. So. Glad that you're here. Okay, let's go over to the Kiwi. So I was saying a little bit earlier with the Kiwi dollar, I think these moves that you're seeing here are overdone. I already am starting to short the Kiwi, just not through the New Zealand dollar. I'd like to see some sort of reversal candle, um, reversal sign today to suggest that this move's over. I'm not, like I said, I'm not sold on the idea that the dollar weakness is over. I'm pretty much sold on the idea that the commodity strength that you're seeing in these commodity currencies is they're gonna start to pull back. That's why I'm buying the pound New Zealand, but I'm not shorting the Kiwi just yet. And to be frank with you here, I don't see it yet. I don't, like, I'm looking at the charts. Let me just delete everything here for the Kiwi. I don't really see the reversal yet. You know, I'm looking at this chart going, okay, well, we had that nasty spike that day. Um, you know, we're at a basically 127% extension of this spike. Okay, here, and if you're using like some data, like FXCM data, might be like this, because the spike is recorded different on different platforms. So, are we finished? Is this move over yet? I don't know. I think we're getting close though, and it moves up to 70 cents, maybe the 69 and a quarter. That might be it. But we're getting there. I think we're within striking distance. You can see really massive divergence here on this last move up. We've passed, I think, past 161% extension here. I mean, these are some big sweeping moves. Am I expecting it to completely roll over? Yeah, I am. I just don't know where that's going to happen. I don't know if it's here, if it's here, if it's here, if it's here. I don't know where it is. But I think that we're probably getting close to some really key resistance. You go like this, that might be channel top. Okay, channel bottom may look something like this. So do we have a lot of downside here? Maybe, but I think we're going to be limited to at least a move if we come down here 67.30. So 67.30 is support. 67.30 is going to be key support actually. Resistance, again, I would say 69 and a quarter, which would be a 50% retracement of the entire move. That's probably a good place to start looking for peaks, especially if we have weak data. And again, I do think we have weak data coming out of the U.S. How's the dollar going to react to it is questionable. But I believe we are in a range. I think we're going to be peaking soon, and we're probably going to slip back down to 65 cents, maybe even, who knows what could take us lower. But I have a feeling we'll be bouncing around here for quite some time, between 70 cents and 62 cents for a while. Okay. So there you go. Let's go over to the Aussie. Okay, so here is the Aussie dollar. Now the Aussie, I want to be very clear here. Let's this trend line you can see from the bottom here in 2001 all the way through. We're back above that broken trend line. Okay, so let's go drawing, remove lines for current. Okay, so now let's go over to the daily chart. You guys might remember we had this Gartley pattern from Friday, right? Worked out really nice. Nice little Gartley. Gave us a nice reversal from Friday. We fell. We rallied back. And even on the weak Australian jobs report, and by the way, the jobs report yesterday was very poor. But the Aussie just continued higher because you got a breakout in gold. You got the Kiwi continuing to surge. So, the Aussie clawed back. But notice how we are now, making lower. highs here. Okay, notice how we're making lower highs. That 88% retracement that did hold. Okay, so right now the high at 73.60 is going to be resistance. We are in a range. Support. Let's go out to an hourly because I want to see how close we are to trendline support. We're probably not very far. We might even be on it. Close. Okay. So I'm going to go with the running assumption right now that we break. Okay. If we break here, the question is how far do we drop? So let's imagine that from this low to high, we end up breaking lower. 72.80 is a 50% retracement. It's also a spike high here. Looks like this is a real big struggle before we broke out. So that 72.80 should offer us really good support on the way back down. Right through here. Okay. So before you get really bearish, the Aussie, just know that there's going to be some support down there. All right, let's go over to the dollar index. Okay, so here's the dollar index. Now that's the daily chart, and I try to explain to everybody that this is, obviously a very, very, very. I'm trying to get rid of these little things. Goldman Sachs missed earnings, huh? Wow, when's that happen? So here's the dollar index. Come on, 4-hour chart. Take your sweet ass time too. Okay. So you look at the dollar index. Obviously, we'll just have to mark up the low because that low seems pretty significant right now. That's at 93.80. Resistance in the dollar index, though, be really critical on this way back up. This should hold us. So any move back up to here, trying to imagine if we get up here, 94.50, that should cap us. We are in a range, big range for the dollar index. Okay. All right, let's take a real quick look at the peso, and then I'm going to take your questions from way back. So here's the peso. Peso's at support, right? We are at support. If you guys wanted to buy the peso, this is probably not a bad place to do it. And I don't trade the peso. I'm just going to say that out loud. Because if stocks roll over, the dollar peso is going up. Okay. If stocks go down, dollar peso is going to rally. So for those of you that can buy the peso, I think you have very manageable risk here. Your risk is probably below like 1620, which would be a daily trend line, right? Yeah, it's a daily trend line. So your risk is below 1620. That's not a bad place to be on the long side, in my opinion, on the US dollar Mexican peso. You don't, like I said, you don't have to risk a whole lot from here. All right. Now, resistance, let's see. Well, I mean, what's the spike low here? 1636. So let's do support 1620, 1636. Something like that. Okay. Really key support down there. Resistance for the peso. Like I said, if the stock market rolls over and we start to see some selling pressure, then this dollar peso should go up. Resistance is where we marked up yesterday at 1668. 1668. 68 for those of you that can trade it. We are in a range. So pretty, I mean, I say we're in a range, but you know, you look at the trend on like a weekly chart, it's still very bullish. I mean, yeah, we're down at this lower end of the, you know, the range in a strong uptrend, but probably be long down here is not a bad place. Let's take a look at the Swedish krona or Norwegian krona. So Norwegian krona is still holding above support. And, you know, crude oil looks pretty weak. Big support here. But I think what makes me a little nervous about the Norwegian krona is the same thing about like the dollar. It's like I'm a little nervous trying to buy the dollar right at this moment. But from a risk management standpoint, it's probably not a bad place to be on the long side. You know, you're not looking for a whole lot. You know, maybe risk below 8 and look for 820. You know what I mean? But I think the upside's capped. But we have 802 to 820 US dollar, Norwegian krona. Support 8.02 to 8.200. Okay, there's your range. And let's go into the Swedish krona really quick for those of you that can trade it. Let's do this really fast. US dollar, Swedish krona, all sorts of support down here. Wait a second. Hold on a second. Hold on. This could put in a nice... If the euro reverses today, if the euro heads lower, this is going to be a really nice reversal candle. Bullish engulfing, possibly. Let's take a look. It's not a bullish engulfing, but still really nice green candle there for the US dollar, Swedish krona. That might not be a bad trade. You know, for those of you that want to be long down here, just some food for thought. You know, that's if the euro turns lower. That's not a it's definitely not a given right now. 805. I don't know. I'm not going to mark this down, but you guys can see. You can see we're at the lower end of our range. For those of you that are, you know, want to trade the bottom end of this range. Okay. Nigel writes in, hey Blake, new to your fold and enjoying your commentary to no end. If you get a chance, can you take a look at the Euro Canadian sitting between 100 and 200 period moving averages on 1 hour charts? Thinking of a long position is viable here. Your thoughts are appreciated. Hey Nigel, well, glad to have you here. Now, if you've never heard my spiel on moving averages, let me just go ahead and say it to you. I have a 200 period moving average up right now because we were referencing it yesterday. I typically don't keep moving averages on my screen. Here's the reason why. I have other screens on my desk, you know, my trading computer and everything else that has multiple sets of moving averages, because moving averages are like shoes. It's not one size fits all. It's like you stick on a 200 period moving average for the Euro Canadian, let's say, for example, and the 200 period moving average doesn't really work that well. Like in this case, you look at the 200 period moving average, and there's a lot of times where we don't even respect it, blow right through it, you know. But you take a 200 period EMA, and we might have a little bit more effectiveness. And it's like kind of like, oh, well, that size 10 shoe didn't fit, but the size 11 and a half shoe fit me just fine. That's why you have to have several different moving averages for different instruments. I think there are some basic ones you can stick to, and a lot of people try to use them for support and resistance. I like to use moving averages more for directionality versus, you know, anything else. But that's just, again, that's just my 2 cents on moving averages. That's why you don't see a whole lot of them on my screen. And when I do throw them on, it's usually a 200 period simple moving average, because that's the most commonly used amongst traders. So you're thinking, okay, maybe a nice long here on the Euro Canadian, and I mean, I can see the 200 period moving average is holding. Let's just go ahead and throw your 100 period in really quick. I'll remove this just after I'm done, but okay. So there's your 100 period moving average. I can see how we are sandwiched in between them. I don't know if I would make that my basis of decision to be long, but let's see here if I can get a couple other things to match up. Like you have your 50% retracement 200 period moving average on an hourly basis sitting right here at 147 and change. See, I don't think you have to risk a whole lot if you want to be long. The flip side is though, if you're looking at this chart here, just to give you the just to give you the 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 opposite view, devil's advocate view, we do have a bearish flag on an hourly bearish flag, and so you have to be careful with that. Okay. So if you're wrong below here, and you're going to be wrong, because if this plays out, unless you're willing to hold it all the way down to 146.50, that's the target on a flag if the flag plays out. So there you go. Okay. Thanks for writing in, Nigel, and I'm glad you enjoy, and nice to have you here. All right, so I'm going all the way to the way back, and Daryl, good morning.